Calculating a solar payback period is simple math. Still, like any other equation, the numbers you plug in will dictate the answer you get. Sometimes those numbers are fabricated by companies more interested in getting a lot of leads than being upfront. So what exactly is a solar payback period? Well, it's the time it takes for the financial benefits of your solar energy system to offset the initial cost of installation. In simpler terms, when you hit your payback period, you are now saving the monies you would otherwise be paying yourself back for the purchase, or worse, paying the utility for electricity. Calculating the solar payback period involves a few key factors. First, you'll need to consider the cost of installing the system. If your net cost is 17 grand and you save 32 a year on electricity, your payback period would be 6.7 years, not considering rate increases, which would shorten your payback period. Now, what constitutes a reasonable payback period? Well, it depends on your circumstances and goals. In general, a shorter payback period means a faster return on investment. However, what's considered good can vary from one person to the next. A straightforward question we ask people based on where they live is, if you give me $20,000 and I pay you monthly dividends starting in 10 years, is that an investment you would make? Simply substitute the dollar amount and time amount for your payback period, and that gives you insight into how you would feel about a payback period for your solar. For those with solar, what did you consider a good payback period before you made your purchase? Let us know in the comments below. Several factors can influence your payback period, and this is a critical part of the equation. So we'll take the time to learn you right. Frankly, I'd rather you not buy solar from us because you fully understand your decision than you regret your purchase. Your geographic location plays a role. Areas with abundant sunlight tend to have shorter payback periods because the solars produce more power and you buy less energy from the utility. Your local utility rate also plays a big part because the more they charge for electricity, the higher your avoided payment is. Areas with super low utility rates will have longer payback periods. In some places, there are incentives for installing solar panels, which would decrease your solar payback period. However, you must know the available funds status and confirm you will receive the money beforehand. In some states, such as Florida, insurance companies can rein on your payback period by jacking up your rates after installing solar. Always check with your insurance carrier what installing solar will do to your premium. If you save $250 a month on electricity, but the insurance company increases your rate by $200 a month, your payback period goes down the drain. Panel placement is another critical factor to consider because one solar panel placed in an optimal orientation and free of shade can produce 30 to 40% more than one panel set in poor direction or with shade obstructing electricity generation. A poorly designed and installed system would cost you more for the same output. Or it would be like driving one car that gets you 45 miles per gallon and another that gets you 20 miles per gallon. Additional work required to install solar panels is significant in calculating your payback period. If you need to upgrade your electric panel, you added 2 grand to the cost over someone who doesn't need to upgrade it. Or if you need a new roof, that sets you back 13 grand, that added a significant amount of time to your payback period. A battery installation can also negatively impact your payback period or enhance it, depending on how you program the battery to discharge. However, this is a gray area because some homeowners are more concerned with having power in the event of an outage than they may be about a quicker payback period. Solar, like most other technology, comes in grades. That means you can install a top-of-the-line name brand panel and pay significantly more than if you install a great generic panel. I believe the best solar panels aren't worth it. More on that in this video here. The number 2 factor that can make or break your payback period is if your system has faults and stops working. This is further compounded if the issue goes unnoticed and you continue using electricity like everything is fine. It is only made more painful if your utility is expensive. Sure as I am brown, someone out there is digging this hole right now and they don't even know it. That's why I talk about solar monitoring almost as much as I talk about how much I love being a dad. The number 1 factor that will absolutely destroy your payback period is if you install solar and your utility only offers net metering for a short period of time. Or even worse, they don't offer net metering. It grinds my gears when solar salespeople discuss a 25-year benefit in an area where net metering is only guaranteed for 2 years, or worse, isn't even offered. For the record, net metering is the function whereby the utility pays you the same value for the electricity, or something very close to it, that they would charge you. For example, if they charge you 20 cents per kilowatt hour and offer you the same rate for your electricity, you have a 1-to-1 net metering agreement, promoting a quicker payback period. But if your utility only offers you 5 cents for your electricity, you need 4 kilowatt hours to bank the same 20 cents they charge you for 1 kilowatt hour. If you're considering financing your solar system through a loan, it will impact your payback period because now it's equal to the loan term. To reduce your payback period when financing solar, apply the difference between your loan payment and electricity savings to the loan balance to pay off the loan quicker. How can you improve your loan payback period? There are a few strategies you can employ. First, consider maximizing your system's efficiency by installing the panels in an optimal location. This will ensure you generate more electricity and reap greater financial benefits. Second, monitor your energy consumption and production. These metrics are relative to one another, as a sudden increase in energy usage can signal a system fault. I mentioned earlier, where you install your solar panels matters because in some utilities, this impacts the value of your electricity. Click on the screen to learn how panel orientation can help lower your payback period and even save you money on your solar panel installation.